Hello traders, Corey Mitchell here with your stock market outlook for the week of May 1st. Each week I go through the same process, just looking at how indices are performing, market health indicators, recent watch list performance or trade performance, sector performance, and that gives me an overall idea of how the stock market is doing and whether I want to deploy capital in individual stocks. If I am seeing individual stock trades that I like, then I would look for the patterns and the trade triggers. And those patterns and trade triggers are discussed in the watch list. So going into this week, May 1st, we're right on the cusp of being in good territory. I'm selectively deploying some capital, but to be honest, I haven't seen a whole lot that I really love the look of. And I'd rather just wait till conditions improve a little bit. But I do like what I'm seeing in the indexes, so that's a positive thing. I'm expecting that I should be start getting more active fairly soon, but I gotta wait for that confirmation. So let's look at the major indices, how they're doing. I look at several different indices each week to give me an overall view of how the whole stock market is doing. Each one of these indexes looks at slightly different things. We have tech stocks, large U.S. stocks, NYSE composite, just a wide, broad array of stocks from different industries, different sizes. And the Russell 2000 looks at smaller companies. I also have a Canadian index up here and a few other ones which we will look at. So let's zoom in here. We can see the NASDAQ in this nice uptrend throughout 2023. Strong run up, pullback, move to a new high. That's definition of an uptrend. Higher highs, higher swing lows. S&P, same thing, but a little bit less strong. This pullback came almost all the way back to the bottom, and now we're just trying to make that new high now. So it isn't an uptrend, especially if we go back a little bit further out to October, November. We can see this overall higher swing highs, higher swing lows, but as I've drawn these lines in here, we've leveled off a little bit. So it's not quite as strong as the NASDAQ, but that's okay. It's still positive. A little bit different story on the New York composite, NYSE composite. We made this big swing low here, and we're trying to fight our way back up. So no uptrend here. You can think of this more as rounding type behavior or possibly even a downtrend. The fact that it's almost up to this swing high again, I'd say this is more ranging type behavior, especially given that these other indices are bullish. The Russell 2000 index, the smaller companies, same thing. We just made this big swing low here, taking out the late 2023, 2022 lows. So no uptrend to be had here either, pretty much moving sideways, or you could say slightly bearish at the moment. We also just, made a new swing low here this week. So we'd really need to see this start pushing up above those highs to get any sort of short-term bullishness going. The Canadian index, same thing, this kind of ranging behavior, but we're pushing at the highs, at least currently. Nice strong run recently. And yeah, so no real strong uptrend here except for the short term recently. The French index I just threw on here because it's been one of the strongest indexes of the year, just an absolute juggernaut pushing to new highs. Gold also very strong. We had a little bit of a setback, but it's holding pretty well here. Same with Bitcoin, and then I have Ethereum in orange here. Really strong in 2023, and a bit of a pullback here, but we've pushed back to the upside. So could get some choppiness in here, but overall still a nice strong uptrend overall. So that's basically what I discuss here. And let's look at the health indicators. This is how many stocks are above their 50-day moving average. This, of course, is just the S&P 500 price chart. And you can see 58% of S&P 500 stocks are above their 50-day moving average, a very crude measure of how many stocks are in a short-term uptrend. It's generally going to be much easier to make money on the long side when you're buying stocks when most stocks are moving up. Very simple premise. And so this really helps with that. When we are below, it's going to be a little bit harder to make money. When we're above 50%, it's generally easier to make money. We're trending higher. in most stocks. So right now you can see 40% of all US stocks are above their 50 days. That's not quite above our 50% threshold. So this one's kind of mixed. It doesn't quite get a thumbs up. It's not horrible, it's just improving. Volume, not super important to me right now. Rate of change is ROC, is the percentage movement of the S&P 500 on each day. And this is just a single day movement. And uptrends are typically classified by lower movement, and downtrends are classified by these big spiky movements where you have these big 2% drops, 3% drops per day. We haven't had any big drops in quite a while, going back to mid-March. And we had one little bit bigger one a few days back, but we quickly recovered from it, so not too bad. We've been staying inside this band of 2% up, 2% down, a little bit more, getting a little bit quieter, which is more indicative of uptrending behavior. So this one I would say is pretty good, other than that one bigger drop recently, but overall I'd say this is pretty good. And the NYSE advanced decline line is also good. It made a higher swing high earlier this month, and by that I mean this was slightly higher than the February high. The S&P 500 has not quite got above its February high. So this is a positive divergence. It's not 100%, but it's a very high percentage signal that the S&P 500 will also make a new high. So we're not that far away from it, but we can expect the price will move above this February based on this signal. Again, it's not 100%, but it is a pretty accurate signal. This one is up volume versus total volume. It hasn't given us any information recently. So that's the breakdown, what I've written down here. I also look at how many quality setups have there been and how have those trades worked out. Even if I wasn't trading them, I like to look at my recent watch list and just see how those stocks performed, and it gives me a sense of how the market is doing. So a couple stocks did take off, but a lot also dropped. So based on that, if you'd taken some trades, you probably would have ended up flat to maybe slightly down. So overall, I'd say I'm pretty happy that I didn't take any trades, because what's happening in the stocks is indicative or is reflected in the market health, which is what we're seeing here. Kind of choppy trading, mixed signals on the indices. Overall, not great trading conditions. We could get there pretty soon if we start moving with these health indicators up into better positive territory. And this signals that we are likely going to do that. But at the moment and recently, you've probably maybe had some great trades, but a lot that also just kind of fizzled. Sectors on the move. You can see over the last month, pretty much everything has been doing pretty well. Nothing in the negative. I would say communication services, which was hot over the last week, hot over the last month, hot over the last 3 months, definitely an area you want to look at. Technology was good over the last week. It's a top performer over the last 3 months. It's a little bit lower on the 1 month performance, but I would keep it on the radar. Healthcare was the weakest over the last week, but pretty strong over the last 1 month and 3 months. So I would keep that one on the radar. Again, this isn't something you really need to focus on unless you're really pushed or pressed for time and you want to reduce your scan list to just a few sectors. But if you do have some time to go through your full scan list, you don't really need to worry about the sectors. So what I'm doing right now, well, if I see trade setups I will deploy some capital on swing trades. We're right on that cusp, so I'm willing to do it, but it's going to be very selective. And of course, I'm always day trading and swing trading, and I actually invest as well. So even during these times when I haven't been active in the market, if stocks have been pushing up as they have been throughout 2023, I'm still benefiting in my long-term account, and then also can take advantage of pretty much moves that happen every single day. Patterns just repeat over and over throughout the trading day, so I'm taking advantage of those with day trading. So that's what I'm doing, and until next week, happy trading.